Hello and good afternoon to the Blytheweigh Morning Show on Core London TV. Our very exciting guest today is Central Asian Metals. They just put out their 2017 financial results. I'm joined today by the chairman, Nick Clarke. Hello, Nick. Thank you for joining us today. I also see that you reported some changes to the board. Do you want to tell us a bit about that?
Absolutely, Bonnie, and thank you for inviting us on. We've just put out our results, as you say. They're the best results we've had. And we've decided that now the management changes that will take place that we announced today, my CFO, Nigel Robinson, who's been with me since 2009 and took us through the IPO that we undertook in 2010. The time is right now, the company is of a right size, that he would step up to the Chief Executive Officer's role. And the CFO role will be taken by Gavin Farrar, who currently is our Business Development Director. Gavin has a lot of expertise in the banking sector. He's a geologist by first training, but spent a lot of time in the debt markets with the banks. So he brings in bank-related knowledge, and so that complements the team nicely. So now I will remain as chairman with a specific remit to look at strategy going forward in building our business further. Nigel Robinson, ex-CFO, knows the business inside out. He will be leading the team.
Oh, well, that sounds like a very strong board to go forward with on your strategy for the company. You've also had, you're one of the lowest cost C1 cash cost producers of copper, which is an amazing feat. And also, you're consistently been paying out dividends throughout the years, which is, and your strategy is about 30 to 50% of free cash flow?
Well, we listed our IPO'd in 2010. And we started production from our asset in Kazakhstan in early 2012. And from 2012, we've been paying a dividend. And actually, this announcement we made this morning is our 6th year of paying a dividend. It's been enhanced by the acquisition of an underground lead and zinc mine in Macedonia that we completed end of last year. But because you're right in saying our Kounrad asset has been one of the lowest cash cost producers in the world. This year we've announced, or last year, should I say, the cash cost was about 52 cents per pound. Now the current copper price is about $3.14, so you can see there's a good margin between our C1 cash operating cost and the sales price. And we've been looking for a number of years for another asset to complement that Kazakhstan copper play. And we settled on an underground lead zinc mine in Macedonia. It seems quite a difference to our strategy from our copper in Kazakhstan, but it has the right financial attributes that we were looking for. It's well invested, and it, most importantly, operates in the lowest point in the cash cost curve for zinc. So whilst it's a different commodity, it still operates in the low point on the cash cost curve. So even when markets take a turn and possibly metal prices go down, we can still remain profitable.
Well, it's also a nice diversification to go to different base metals than just be in one like copper. And also, too, the lead zinc prices have been improving quite a bit in the past few years.
Well, they have, and this obviously supports the decision for us to go and acquire this mine. Last year, we've seen, on average, between all three metals, copper, lead and zinc, about a 28% appreciation in the price. So that obviously is an attractive proposition, but you know, the argument could sometimes be we're buying at the top of a market. Well, we actually agreed the price to buy this in June of last year, and the prices have continued to appreciate, and we've seen about 18% on zinc and about 12% on lead since that time. So we've seen quite a rise in the price. Now, we only completed the acquisition in the beginning of November of last year, so we had 2 months of economic benefit to accrue to the company, November and December. And in fact, in those 2 months, SASA contributed $20 million of revenue and about $14 million of EBITDA to the company. So that, allied with a record copper output from Kounrad and an increase of over $1,000 in the average price of copper realized, resulted in a $106 million gross revenue for the company for last year, which was significantly up on the previous year's numbers.
That was a very strategic acquisition, and it is expected that copper and zinc prices will continue to improve with the whole increase in the electric vehicle market going forward.
Well, yeah, I mean, You know, that revenue of $106 million supported an EBITDA, an adjusted EBITDA of $66 million, which is a 60% increase on the EBITDA on the previous year. Obviously, rise in the copper price and the inclusion of the financial results from Sasa. But it shows our strategy to buy something that was operating and cash flowing. And it was accretive from day one, right across the spectrum. So in terms of EBITDA, earnings per share, profit, and revenue, it's been accretive. And now it's got us into lead and zinc, which are both, as you say, metals which are getting more exciting. They've seen a good run on the price. A lot of the consensus amongst the economists are that these prices should be maintained, at least for the short to medium term. And of course, this leads us into the electric vehicle scenario. What's going to happen going forward for lead, zinc, and copper? All metals which are needed for that market.
And what's your strategy going forward for 2018?
Well, our strategy for 2018 is very much to consolidate management at Sasa. We've only been in charge for now 5 months or thereabouts. It is a much more complex operation than the one we've currently been running in Kazakhstan. There's over 700 employees. There's a much more complex dynamics to operating the mine. And so I think we need to consolidate the management of that asset. And part of the changes in the structure of the board and senior positions, Nigel Robinson moving to CEO, is all part of that strategy to get the management of Sasa right, but also to look at other opportunities as they come along.
Well, considering your sort of consistent and well-managed operations at Kounrad, I'm quite confident that you will get Sasa up into the level of operation efficiency that you would like.
Well, obviously that's our aim. Look, we've been a consistent dividend player for the last 6 years. We didn't acquire Sasa to go backwards. Sasa is accretive, it's a good asset, but it will require a lot of hard work on our behalf to maintain its current standards, its output, and the economics of it. We expect to be a strong dividend payer going forward, and comes back to a comment made earlier, which is about our dividend strategy. From the 1st of January, our dividend strategy now is to pay out between 30 and 50% of our free cash flow from our operations after our capital programs have been satisfied. So the dividend that we announced today, which was 10p, which took our total year for 2017 to 16.5p, to replicate that dividend payout, we'd be paying 40+% free cash of our free cash flow, which is payable and manageable given the current commodity price environment.
And so you are looking at potential other opportunities for acquisitions.
It's a strange how success begats a lot of attention, because having put away a $400 million deal, which required a reverse takeover, which is quite a complex transaction, a lot of paperwork, a lot of legals has to take place. It took us a lot of time last year to put it all away, and then to raise $150 million in the equity markets. We were the 3rd largest equity raise last year, behind a company called EN Plus, who knew, and Polyus. And so, you know, we actually are a standout mining company. We're the largest mining company on AIM currently, with Highland Gold. And now that level of size attracts others to come to us, banks, advisors, with their clients' permission to say, what about this? Have you looked at this project? Have you looked at this company? So we're seeing, actually, since we put this acquisition away, we're seeing a lot more attention being put on us and people coming to us with potential deals. That's not to say that we have anything particularly in the pipeline, but certainly they're coming thick and fast. So we'll keep on looking. But it took us 3 years to decide on Sasa. I'm not saying it'll take us 3 years for the next one, but we're certainly not going to dive into anything too soon.
Yes, you're going to be very smart about it and keep the same criteria that you have in the past.
Yeah, the criteria is it's got to be accretive. It's got to make sense. It's got to enable us to pay dividends, and it mustn't obviously be, you know, in a jurisdiction which adds risk to our business. Mining is a risky venture anyway, and the business of the management is to reduce risk as much as they possibly can. But there's always some risk there in any jurisdiction in which you operate. But it must be accretive, and it must be, if cash costs in the lowest quartile of the cash cost curve, if at all possible, so that it remains profitable throughout the cycles.
Oh, well, that's fantastic. Thank you so much for joining us, and congratulations on your great earnings and your great acquisition. And good luck on everything moving forward. I look forward to interviewing you again and hearing all about your good results. Thank you, everyone, for joining us on the Blytheweigh Mining Show. Just remember, Central Asian Metals has consistent dividend payments and has had a great profit for the year in 2017. So keep an eye on what they're doing going forward. Thank you very much.